Well, thanks for that, Syed. We all really appreciate your tech updates. They keep us informed, keep us on our toes, and keep us current with what's going on in the marketplace, right? So definitely much appreciated there. So I'm going to shift focus really now towards inflation, and this is a topic that we covered at nauseum really in our first season of the Bottom Line, and it was really a contentious topic amongst key policymakers because clearly they were seeing all the ingredients there for high inflation, but they weren't really sure whether it's transitory or whether it's here to stay. I think towards the end of the year, really, Powell has really conceded that we should probably remove the label of it being transitory and really come to grips with the fact that the inflation is here to stay. Really, what's up in the air now is whether we're going to continue to see this growth in inflation or whether it's going to sort of start to tail off, right? And really, if you see year over year where our inflation numbers are, I think they started off at 3-4%, but really towards the tail end here, we're seeing 5-6% inflation year over year, which is just incredible, right? So we already saw them like the effects of inflation in asset prices such as real estate. We're also seeing it a little bit in certain salaries as well, depending on different industries that you're a part of. And really just basic groceries as well. A lot of families have noticed, like you go to a grocery store, what you could get with $50, for example, late last year is not what you get today. Right. So clearly it's something that is here to stay, in my opinion. And really, again, the question is whether it's going to start tailing off and we're going to start to stabilize at these levels, or if it's going to continue going higher, which in my opinion would be more painful. But I did want to reference an article that's on investing.com, and said can provide the link to that article in the description to this video. But Deloitte actually recently modeled out 4 different scenarios for 2022 in the US, really depicting what unique opportunities or challenges that may present itself over the coming year, right? And keep in mind that Joe Biden's actually said that 2022 should actually be a very strong year for the US, right? So that's the expectation. But let me quickly go over what the 4 different scenarios are, okay? So there's really there's 4 different economic outlooks. 2 of them are positive, 2 of them are negative, right? So they would have a negative impact on the US economy. So the first one, which is the positive one, is blue skies. In this blue sky scenario, you'd be preparing for post-pandemic growth opportunities by going long on debt. So taking a lot of debt aggressively on to invest in foundational capabilities and growth-oriented M&A. Increase enterprise resiliency by diversifying supply chains. So what does that mean? Okay, so growth-oriented M&A, a lot of this happens through debt instruments, right? And what's our advantage right now, given our current economic landscape? It's the cheap cost of capital because interest rates have been low. So taking advantage of that, if the economy continues to get stronger with restrictions loosening up, supply chain shortages, which have been a problem in 2021, if those start to ease up, that'll strengthen the economy. So really, it's an opportunity for a lot of businesses to take advantage of the cheaper access to capital. And that'll drive growth. So sun showers is, again, a positive outlook, but a little bit more, nuance there. So you would mitigate rising input costs and use performance improvement to invest in growth. You take advantage of inexpensive debt early on to disrupt weaker competitors or address current weaknesses to avoid disruption. So this acknowledges that, again, the cost of capital is going to be cheap, but input costs may continue to rise, which would be, a problem for businesses, right? And that's something that they faced in 2021, increased cost of goods or cost of sales, slowing down profitability, right? So that's one thing that they've factored into that sun shower scenario. The third one, and now this is more of a negative outlook, is stormy weather. So focus on increasing efficiency and lowering risk through economies of scale and cost-saving strategies, for example, automation, and diversifying business models and using financial hedges to mitigate the risk of rising inflation. Okay, so basically this is sort of starting to indicate that, inflation is here to stay. It's actually going to get a little bit worse potentially, so you want to hedge yourself against that. And really, for businesses to actually continue to be profitable, they have to focus on internal operational efficiencies. So that's not something that they emphasize in the first 2 scenarios, but now they're looking inward in this stormy weather scenario. And then the last one will be downdraft. So drive demand and emphasize value through new experiences and differentiated offerings. rationalize suppliers and partnerships, and consider restructuring to increase efficiency and savings. Again, this is the worst outcome, really, and they're driving home the point that if businesses are going to continue to survive in these sort of environments where input costs are rising, inflation's here to stay, cost of debt, for example, if there's a rise in interest rates to try to mitigate that, so now that's going to increase the cost of borrowing. Is it enough to combat inflation? Probably not, right? So this is sort of that negative outlook, and really what they'd have to do here is to drive growth through value, right? So you'd have to differentiate yourself with your product or service in the marketplace, and show consumers more value in order to stay profitable, right? So again, this is the more painful one, and businesses have to take more of a steadfast approach in that scenario. So 4 different scenarios, all equally likely, in my opinion. We could see them all play out really at different stages within 2022. But definitely something to keep an eye on, because obviously Deloitte's Deloitte, right? So they have a good pulse on what's going to happen in the future. Obviously, no one can predict it with certainty, but they have a fairly good idea, and I'd like to bet that at least one of these scenarios will play out for them.